Hi, my name is Elena. Today, I'm a corporate president. I lead teams. I make financial decisions every day. I sit in boardrooms, reviewing numbers, making choices that affect thousands of people. People look at me now, and they see confidence. They see control. They see success. But what they don't see is the path I took to get here. Because that path was not clean. It was not easy. And it was not financially responsible. There was a time in my life when I didn't understand money at all, not how to manage it, not how to protect it, and definitely not how quickly debt can take control of your life. I want to take you back to that time, because this is not just a story about payday loans. This is a story about how small financial decisions turn into big consequences, and how lack of financial literacy can quietly shape your future. It started when I was in college. I was ambitious, focused, determined to succeed. But financially, I was completely unprepared. And that combination, ambition without financial understanding, is dangerous. Because you move forward in life, but your financial decisions pull you backward. And you don't realize it until it's too late. When I got to college, I felt independent, free, in control of my life. I had responsibilities, tuition, books, living expenses, and for the first time, I had access to credit cards. They were everywhere, on campus, in the mail, online. Build your credit, start your financial future. It sounded responsible. It sounded smart, and I believed it. I got my first card, then another, and another. At first, I used them carefully. Small purchases, things I needed. But then something changed. Spending became easier. Too easy. I didn't feel the money leaving my hands. There was no immediate consequence. Just a swipe and done. I told myself, I'll pay it off later. I'll catch up. I'm managing this. But I wasn't managing it. I was ignoring it. And that's how debt begins. Quietly, without urgency, without fear. Until one day you look at your balance and realize it's bigger than you expected and harder to control. As my balances grew, so did my stress. Minimum payments started to stack. One card, then two, then three, each with its own due date, each with its own balance. And my income didn't increase fast enough. I started juggling payments, choosing which card to pay first. Which one could wait? Which one I could ignore, just for a little while? That's when financial pressure begins. Not when you first borrow, but when you start choosing which obligation to meet and which one to delay. I still believed I could fix it. I still believed this was temporary, but I was wrong, because I didn't understand that interest was working against me. Every month, my balances grew, even when I paid. And that's when things became overwhelming. One afternoon, I found myself short on cash. I had bills due, minimum payments, rent, and I didn't have enough money. That's when I noticed it. A payday loan store, bright signs, simple promise, get cash today, no credit check, fast approval. It felt like a solution, a quick fix. I told myself, this will help me catch up. I'll pay it back quickly. I just need a little time. I walked in, filled out paperwork, showed proof of income, and within minutes, I had cash and relief, immediate relief. But that relief was temporary because I didn't understand what I had just agreed to. The loan seemed simple. Borrow a small amount, pay a fee, repay it in a couple of weeks. It didn't feel expensive. The fee looked small, manageable. But what I didn't understand was how that fee translated into real interest. Because payday loans are short-term, very short-term, and when you annualize that cost, the interest rate is extremely high. Sometimes 300%, sometimes more. I didn't see that. I only saw the fee. And that's how people fall into the trap. Because the cost is hidden behind simplicity, behind convenience, behind urgency. When the loan came due, I didn't have the money, not enough to repay it. So I rolled it over, paid another fee, extended the loan, and I told myself, this is the last time. But it wasn't. Because the next time I was in the same position, and I rolled it over again and again, each time paying more without reducing the principal. That's the trap. You're not making progress. You're just paying to stay in debt. And over time, that becomes unsustainable. Eventually, one loan wasn't enough. I took another, then another, because I needed new money to cover old obligations. And each loan added pressure. More fees, more deadlines, more stress. This is where compounding works against you. Not like investing, but like a growing burden. And the more you borrow, the harder it becomes to escape. That's where I found myself. Overwhelmed, exhausted, financially trapped. Eventually, I couldn't keep up. Payments were missed, my credit score dropped significantly, and that affected everything. Renting, borrowing, opportunities. It took me years to recover, years to pay off the debt, years to rebuild my credit, years to rebuild my confidence. And that's the lesson I want you to understand. Payday loans are not just expensive. They are structured to keep you borrowing. Short timelines, high fees, repeated cycles. That's what makes them a trap. And the earlier you understand this, the better decisions you will make. Because financial literacy is not about avoiding money, it's about understanding it and protecting yourself from decisions that seem small but have lasting consequences.